As promised, we are now getting into valuation of Take-Two Interactive. We can see this year revenue has been flat, it even declined a little bit, but overall we can see that there's a healthy growth. And we have a compounded annual growth rate of 19.4%, including analysts' estimates until 2025. And we can also see that analysts expect the company's revenue to start growing again. And it's the same with free cash flow. We can see this year it's very, very low, mainly because of the big acquisition they made. But analysts expect it to go up again, especially in 2025, where it's up 63%. I think that's because they expect GTA 6 to be released, and this means in 2023 and 2024 they will have a lot of expenses for research and development, which will lower the free cash flow. They will also have to advertise the game, which will also lower the free cash flow. And when the game is finally released, then in this year a lot of expenses will be gone. So therefore I understand why analyst estimates are so positive for the company. We can see they didn't have any net debt for a long time, but because of the recent acquisition they have some debt, but it's no problem at all. The number of shares outstanding has been slowly increasing, and from 2022 and 2023 we have a huge increase, of course, mainly because of the acquisition. But I expect this to come down and to have a slow increase of shares. The stock is currently trading at $95 a share, as it's been hit very hard today. And now let's get into our different scenarios. Let's start with the normal case. As you have seen, Take-Two will probably release GTA 6 in 2025. And after that, I don't expect big jumps in free cash flow. Maybe it would even be justified to bring the free cash flow down. But we have seen the company gets more and more into recurring revenues. This is what we've seen in the latest earnings report. And customers are more willing to constantly buy something in a game. Therefore, I expect the free cash flow not to drop this much. And I decided to constantly keep it growing at very low rates and even decrease it over time as things get more and more uncertain. Because of the volatility of the free cash flow, I will also use a very high free cash flow yield for a company, which could probably grow very much faster. And we still get an internal rate of return of 14.8%, which is very high. In the best case, I let the company grow even faster. We use a slightly lower fair free cash flow yield, and of course the internal rate of return looks even better. We have also seen that with the acquisition of Zynga, they become a huge player in the mobile segment, and therefore I also expect the free cash flow to be much more constant than it has been in the past and less volatile. As I really care about the risk and reward of a stock, I like to be very, very conservative in the worst case. The gaming sector is expected in the next years to grow with a compounded annual growth rate of 4%. And in this case, I still use analysts' estimates until 2025, but I bring down the growth rate to 0, and we use a very high fair free cash flow yield of 8%. But in this case, we would still get an internal rate of return of 9.3%, which is in line with the market, maybe even a market-beating return. And that's something I really like, as it shows that the risk and reward is very nice of the stock. Let's take this and get to our combined result. We can see we get an internal rate of return of 14.5% at the current price. Please keep in mind that this is no financial advice and that you have to do your own research and make your own decisions. But at the current valuation, I like Take-Two Interactive. If the price drops more, I like it even more. This has been a valuation of Take-Two Interactive stock. If you want to see more stock analysis videos, please subscribe to the channel, it would mean a lot to me. And feel free to make suggestions in the comments for other stocks that I should analyze.